Hello everyone, it's Daily here, and in today's video I'd like to show you a trading opportunity that's currently on US dollar Canadian dollar. Before you can see a daily chart of US dollar Canadian dollar. Those are daily candles, and as you can see there was a pretty strong sell-off last year in June. So this was basically 1 year ago, and because of the strong downtrend I'll use my trend setup. So I'll use the volume profile for the trend area, and I will look for significant volume clusters within this area. Currently the price is at the highest peak of this volume cluster, which shows the volumes that got accumulated in this area. And I think that the strong sellers were pushing the price lower into this downtrend, were adding to their selling positions right there in this area because of this volume cluster. I think that now when the price touched the level, those strong sellers will be defending their positions and they'll push the price lower from this area. So right now I'm in a short trade from this area, and I think that again the price will go downwards. There are also two more reasons why I think this short level is that strong. The first reason is that this was a strong support. You can see the price reacting pretty aggressively to this level, and when the price went past the support it became a resistance zone. So this is another confirmation of the level. Now it is resistance zone. So we have volume set up, this volume cluster. We have support becoming resistance set up. This is second confirmation of the short level we have. Apart from those two confirmations, there is also a third one. It's based on price action and psychology. The strategy is called AB equals CD. You want to see a significant swing point and you want price to move in this wave-like manner. You name the extremes of those swing points A, B, C, and somewhere in this area there will be point D. And in this point the price should reverse. With this strategy you want to use the Fibonacci tool, and first you stretch it from A to B. You measure the distance from A to B. Then you need this swing point below 50% of the distance from A to B. I hope you can see it. This is the 50% mark, and the C is below it, so the setup is good to go. So we have distance A to B and C below 50% of this AB distance. Now you move the Fibonacci tool. You don't change the distance, you only move the tool like this. So you measure, so it is the same distance from C, from A to B to D. This is the place where the D should be, and as I indicated before, the price should reverse at the D point and it should go lower from this area. This is based on psychology and on the natural retracements that are quite common in the markets. I don't use this ABCD strategy as my main strategy, but it's definitely a very good confirmation strategy. As you can see, it confirmed our short level. Actually the short level we have, it's a little bit higher. It's based on the volumes mainly and is a little bit higher, but the ABCD strategy confirmed that the short is somewhere in this area and is the third confirmation of the level we have. So the more confirmations you have, the better. And right now, with the level confirmed, you only need to place your stop loss and your profit target. The logical stop loss for this trade could be somewhere in this area, because the volumes are pretty low there, and the main resistance created by those volumes is right there in this area. When the price goes past it, past those volumes, we will know that the resistance didn't work. So if the daily candle closes above this area, I'll close the trade. This will be the stop loss. And I have two possible profit targets for this position. First is in this area. You've probably noticed that this is more or less risk reward ratio 1. If this is the profit target, you can see that there was a pretty significant rejection of this area, which means that it was pretty strong resistance. When the price went past it, it became support. So this is first logical profit target that you could take, and the second profit target that's possible in this case would be based on volume profile, and it would be a little bit above this heavy volume area. I think this is actually pretty strong level to go long from, and you don't want to be in short position when the price hits this very strong area. So I think it would be best to quit somewhere around there, a little bit above those heavy volumes. So you can either split the position and take first profit target in this area and the second profit target in this area, or you can trail the position to the second profit target, or you can just go for the first profit target or for the second profit target. It depends on the market behavior and what suits you best. Right now we just need to wait and see how the price develops. It may not end up as a winning trade. Not all the trades end up as a winners, no matter how good the level is. Even the best strategies can have mostly 70% win ratio. So this could be a winner. I hope that it will be a winner. There's a high probability that it will be, but still it could be also a losing trade. We'll need just to wait and see, but hopefully, no matter how this trade ends, you will have learned something new and something useful. So I hope you liked the video, I hope you learned something new and useful, and I'll be looking forward to seeing you in some next video, and until then, happy trading!